The broadcast is now starting. All attendees are in listen-only mode.
Good day, everyone, and welcome to our webinar with the Webtrader team. My name is Dinelle Zamela, and today we're going to be sitting with Sandesh Ganasee, who's going to be taking us through the US listed sector ETFs that are available on Webtrader. Before I hand over to Sandesh, I just want to make sure that everyone can hear me, and if you can hear me, could you please lift your digital hand? It is the little hand icon. It'll let me know that you can hear me. Okay, I see a few hands. All right, Sandesh, over to you.
Awesome. Thanks, Danielle, and thanks everybody for joining us this afternoon. Today's presentation, ladies and gentlemen, is just about making our clients aware or making you aware of what is available on the Webtrader platform by way of sector-listed ETFs. Just note that the views expressed in this presentation should not be construed as investment advice. All information that will be conveyed is purely based on facts. So please don't construe this as investment advice. Ladies and gentlemen, there's quite a few sectors or broad-based sectors in the US and in the world at large. The sectors that we'll be touching on today are just 5 of those sectors. In total, there's about 10 or 12 sectors, but we're gonna touch on 5 because we don't really have time for all of them. And just giving you an idea of what exchange traded funds are available, what exactly those sectors represent, what exactly those sectors, what type of exposure rather those sectors can actually provide you with on the Webtrader platform. So the very first sector that we'll be touching on is the consumer discretionary sector. Now, just to give you a bit of context there, ladies and gentlemen, it is non-essential but desirable goods. It's more of a want than it is a need. They include goods like durable goods, designer clothing, entertainment, leisure, and cars. And it really is dependent on the state of the economy. It goes to say that consumers will essentially forego these goods if the economy is taking a strain. It's also safe to say that the performance of these companies or the companies within these exchange traded funds, the holdings, that their shares are essentially tied to the state of the economy. It's also very interesting to know that the performance of consumer discretionary companies, it's a leading indicator on the state of the economy. So essentially, if an exchange traded fund that is tracking an underlying company for consumer discretionary goods is doing well, that is an indication of where the economy is headed. It also gives you a fairly good idea of where the stock market or general stock market performance is heading to. So bottom line is when the economy begins to strengthen and consumer confidence increases, the demand for consumer discretionary goods increases, which obviously boosts sales and stock performance of consumer discretionary companies. And it's important to note that they usually tend to outperform the stock market in strong economies. So just going on here, a couple of ETFs that you can have a look at are the Consumer Discretionary Select Spider Fund. And as we move on, you'll see that I've got the ticker or the share code in brackets. These exchange traded funds, their names can be quite a mouthful. But essentially, these are just a few of the exchange traded funds that are available. Obviously, there are a lot of ETFs that track a consumer discretionary fund and all the other sectors in different manners. They'd either be equal weighted, they'd be market capitalization weighted. Some of them would have more holdings, some of them would have less holdings, some of them would be spread across different geographies. So these are just a few of the ETFs that you can start with, and essentially give you a bit of an idea of what they actually hold. So I'm going to delve into a couple of them. The first one there is a Consumer Discretionary Select Spider Fund, and a lot of the funds that are presented in this presentation are Spider ETFs. This is by no means an endorsement or a fair recommendation of the SPDR exchange trade funds. It's just that I have touched on some of the cheaper ones, or the ones that are popular amongst many of our clients. So the first one there being the Consumer Discretionary Select SPDR Fund XLY is the share code. Now TER, if you don't know what is a TER, ladies and gentlemen, it's essentially the total expense ratio or the internal costs of running a fund, which you do not see. This is obviously on top of the brokerage that you would normally pay to enter and exit a particular share or an exchange trade fund, or an instrument for that matter. So it's just essentially the internal cost of running the fund. And if we have a look at the first one, the XLY, it's got a total expense ratio or TER of 0.13%. Anything below 0.45, below 0.5% is usually considered fairly cheap. And in this case, 0.13 is extremely cheap. So you've got it's got a heavy weighting there towards Amazon. Close to a quarter of this fund is in Amazon. The rest of it is essentially market cap. So Disney 5.4%, Netflix 4.6%, and Nike there 3.4%. Moving on, we've got the Vanguard Consumer Discretionary ETF. Also Amazon, quite heavily weighted there. 1/5, almost a fifth of that fund is in Amazon. It is slightly cheaper though than the Consumer Discretionary Select SPDR Fund. It is important to note though, ladies and gentlemen, that each of these funds, Amazon has a weighting in excess of 20%. So just keep that in mind when you are trading a fund like this. So any significant movements in Amazon would obviously result in this exchange traded fund moving quite significantly. The rest of those ETFs obviously being the Global ex-China Consumer Exchange Trade Fund, share code there being CHIQ. A little bit on the expensive side there, total expense ratio of 0.65%. As you'll notice there, Alibaba and Yum China make up the almost 10% of that particular fund. And also just important to know that over 17% of this particular fund, which is the Global ex-China Consumer Exchange Trade Fund, over 17% of that is actually in the internet business. You'll obviously notice, generally speaking, ladies and gentlemen, that these funds are more expensive than the previous ones. They essentially call feeder funds, and they tend to be a bit more expensive than funds that are tracking an index directly. Moving on to the next sector there, ladies and gentlemen, you've got your consumer staples. And your consumer staples are essentially products that will fall under consumer needs. They include food, beverages, and other household essentials, like soap, toiletries, and staples that you would normally find in any household. They're always in demand, and they are non-cyclical. So elasticity of demand comes into play here. Essentially, consumers that are non-price or that are not sensitive to price, they essentially, or these goods rather, are price inelastic, whereby we say that they are not sensitive to the prices. You will always need these goods in your household. They're considered low volatility and play a key role in defensive strategy. So in times of a market recession, these goods will always be in demand, and therefore we also see low volatility. Obviously, with low volatility, you're not going to expect the greatest returns in terms of capital price movements. However, they do have, having said that, they still have rich dividend yields. Some of the ETFs they included in that particular sector would be once again your SPDR funds, your Vanguard, iShares. You'll see a couple of common suspects there within these exchange trade funds, within these sectors rather. So a couple of companies that actually touch, or rather that sell these, or rather that are involved in the consumer staples sector, would be Kimberly-Clark, Procter & Gamble, and Philip Morris. And as I mentioned previously, those are staples. So we're just going to quickly touch on some of the constituents of these funds. Firstly, you've got the SPDR Fund XLP, total expense ratio of 0.13%. As you'll notice, a couple of common companies or underlying holdings in these particular funds. One of them being Procter & Gamble, the other one they being Coca-Cola. You've also got Walmart there. So there's quite a few Quite a few of these exchange trade funds rather have holdings that overlap. It just depends on their weightings. It depends on the depth of the holdings in terms of the number of shares they're currently holding within that particular fund. And then you've also got geography there. So if you have a look at the last one, there being the Colombia Emerging Markets Consumer Exchange Trade Fund, total expense ratio slightly on the expensive side, but it has NASPAs there, or rather it has NASPAs of 10.2%. And the geography is really spread between or heavily weighted towards China and South Africa. So moving on there, ladies and gentlemen, a couple of things, or rather another sector that you can have a look at, or that is available on the Webtrader platform, is the energy sector. Essentially, the sector would produce is a sector which produces or supplies energy. And those companies would be those that are involved in exploration, development of oil and gas reserves. But also remember that it includes rather alternative energy, which is on the tip of everybody's tongue in the last few years. And that's purely because, many producers, many utility providers are trying to see or are seeking alternative methods to produce energy and really power the planet. The energy sector is sensitive to commodity prices and political events. Very important that. And some of the ETFs they included are the Energy Select Spider Fund, XLE, Invesco, as well as the First Trust Energy Alpha Dex Fund. Some of the alternative exchange trade funds or energy exchange trade funds is the S&P Global Clean Energy ETF, the share code there being ICLN, the NASDAQ Clean Edge Green Energy Fund, as well as the Market Vectors Global Alternative Energy ETF, the share code there being GEX. So just important to note that although you've got the traditional energy sector that would normally track things like oil and gas reserves, exploration, production and supply of energy, you've also got your alternative energy exchange trade funds like the ones listed at the bottom of this page. So a couple of things continued on the sector. Obviously, you'll notice that these spider funds are very cheap at 0.13% total expense ratio. But this is a rather heavily weighted exchange trade fund, the one XLE right at the top. It's heavily weighted towards ExxonMobil as well as Chevron. So those two funds making up a really, really large, over 37% of this exchange trade fund is essentially exposed to the energy industry, and more particularly the US energy industry. So it would be useful, this particular exchange trade fund would be useful for those investors that want to lean towards a sector that will thrive when oil prices are strong. There's also very good liquidity in this ETF. However, bear in mind that there are concentration issues. Obviously, you can see that those two exchange trade funds making up a big chunk of this portfolio. There is an alternative that you can have a look at, which is the one below, the RYE, a total expense ratio of 0.4%, so slightly more expensive. It is equal weighted, so it gives you a bit more balanced exposure. But as I've mentioned, it is slightly more expensive because of the strategy that it actually pursues. As I've mentioned previously, you've also got alternate energy, which is all the rage, especially given hot topics, excuse the pun, like climate change, depressed oil prices, as well as the environmental impact. It is important to note that this particular sector, being the alternative energy sector, is still in its infancy, especially given company business models, wind and solar usage. So it is important to note that this is a fairly volatile sector. Just keep that in mind when you do decide to actually put some of your hard-earned cash into the alternate energy sector. Having said that, however, because of their high volatility and the infant business model, there's still plenty of growth in this particular sector. The US and the China, which are two of the biggest energy consumers, are investing quite heavily in terms of wind and solar. And this is a sector that is poised to grow quite exponentially. Another sector there, ladies and gentlemen, which would be the financial sector. Obviously, financial sector not always given the best news coverage. Obviously, bearing in mind the 2008-2009 financial crisis. It's funny. It's funny to say that because we actually 10 years now from the time that Lehman Brothers collapsed. It's 10 years to the day that Lehman Brothers actually collapsed. So we are actually we're in a bull market really for the last 10 years. And one of those sectors that would have played a significant role in terms of actually pulling the global economy and the US economy out of that rut would have been the financial sector. The financial sector is, of course, has been heavily regulated since the 2008-2009 crisis. So it's very important to note that this particular sector would have quite a bit of US policy tied to it, just to ensure that we don't have a repeat of the 2008 crisis, although I somehow feel it probably will at some stage. This sector that I'm about to touch on, it's important to know that it is just the financials in the broad sense. It is essentially can be subdivided into banks, insurance companies, private equity, mortgage finance. So it is a really large sector, but we're just talking about it in the broad sense for the time being, just to give you an idea of what's available on the platform. As you would know, the overall health of an economy is essentially tied to the overall health of the financial sector. The health of an economy, or rather the financial sector, is essentially the pillars that hold up an economy. So you have a bad financial sector, you really have a bad economy as well. So a couple of exchange trade funds that you can have a look at, ladies and gentlemen, to give you some exposure to the financial sector, and more importantly, the financial sector in the US, is we find ourselves once more XLF, which is another SPDR exchange trade fund. Total expense ratio of 0.13. As you'll notice, a couple of those key players there being Berkshire Hathaway, JP Morgan Chase, Bank of America, as well as Wells Fargo. So those are your top 4 holdings. It does have about 100 individual holdings and largely contains, those large cap household banking names. Another one that comes to mind there is the Vanguard Financials. Total expense ratio 0.1%, so cheaper. Similar to XLF, which is the one above, but it has more exposure to small and mid cap stocks, and it has over 500 individual securities. So you essentially have your financial risk spread over a larger number of holdings. The other two that you can have a look at there is the SPDR S&P Regional Banking Exchange Trade Fund. So as you know, in the US, they've got a lot of banks. Many of them are essentially regional banks. So where funds like the XLF, which is the one right at the top, is essentially dominated by large cap companies, the KRE essentially has exposure to small and mid cap banking stocks that are not impacted by the performance of the big Wall Street banks. It is exposed to those regional banks that I've mentioned. Also note, it is an equal weighted index. And then finally, ladies and gentlemen, you've got IXG, total expense ratio of 0.47%. This is also heavily weighted towards large caps, but 46% of its constituents are companies outside the United States of America. So whereas the top 3, or the first 3 that we've touched on here, would be majority US companies, the last one there has about 46% of its constituents outside the United States of America, and the rest of that would be the US. The final sector that we're touching on, ladies and gentlemen, in this particular presentation is the healthcare sector. And the healthcare sector also considered a sector that is largely defensive, as it will do well in both a recession as well as an expansion or a boom. We're referring here to healthcare and not just healthcare in the traditional sense of healthcare, but also the biotechnology subsector of healthcare. The USA spends the most on healthcare, and this is per capita more than any other country, if you don't know that. Also, a sector that is largely influenced by US policy, similar to the financial sector. It's a highly regulated sector. If you think of Obamacare or the proper act called the Affordable Care Act of 2010, that'll tell you that this sector is very highly regulated. It's also largely inelastic, which allows those companies that are involved in the sector to have higher margins on their profits or their bottom lines. purely because consumers are not very sensitive to change in this particular sector in terms of price. And a couple of ETFs you can have a look at there, ladies and gentlemen, are the Healthcare Select Spider Fund XLV, Spider Biotech Exchange Trade Fund. We're going to quickly expand on those. So as you'll see, these Spider Fund right at the top once more. Exposure is concentrated in the USA, just important to note. With the exposure concentrated in the USA with mostly large cap stocks. The second one there being the Spider S&P Biotech Exchange Trade Fund, total expense ratio being 0.35%. Exposure is to the narrow biotech sector. So this has got a bit more specialist focus to the biotech sector, and also the small and mid cap securities in that particular sector. It is an equal weighted index. So if you're concerned about market capitalization having a significant drag or effect on the market capitalization ETFs like the one above, then you probably would be better suited to go for the Spider S&P Biotech ETF. Just bear in mind that it does have a particularly good exposure or a large exposure to the biotech sector. Finally, then, ladies and gentlemen, you've got the Crane Shares Emerging Market, the Crane Shares Emerging Market Healthcare ETF. But on the expensive side of the total expense ratio being 0.8%, but the makeup of this fund is largely cash and emerging markets. So emerging markets would be just over 50% of this particular fund. And that's really part one of the US listed sector ETFs, ladies and gentlemen. These are our contact details. You can drop us an email, give us a call, visit our website, view our community page, which Dineo keeps up to date, or also visit our Twitter page. So do we have any questions?
Thank you, Sandesh. Just want to see if we have any questions. Okay, we've got one question from EJ. Which company is DIS under XLY ETF?
All right, okay. So EJ, let's go all the way back and answer your question for you. Oh, you want to know which company is DIS? Oh, sorry, I misunderstood the question. DIS is Disney. Disney is DIS. That's what that share code is. Let's just go back here so you can have a look at all the other. This would be under consumer discretionary. There we go. So if you want to quickly take that down, have a look at that. DIS has a 5.4% weighting and a 4.6% weighting in the iShares. That's really a consumer discretionary fund.
All right. Thanks, Sandesh. We don't seem to have any other questions. As always, the presentation will be available on the website, on the OST website. So if you do miss it, or if you want to go back and review something, please feel free to head over to Online Share Trading, and you'll be able to find a download, or you'll be able to download the presentation there. And then just as if you have any other questions, please email securities@standardbank.co.za, or you can tweet us at SPG Trader. EJ, thank you very much for the suggestion. I have put it forward to Sandesh to look at the ETFs, including NASDAQ stocks, and that is something we'll consider for a future webinar. Thank you very much, everyone, for joining us, and do enjoy the rest of your day. Thanks, Sandesh.